Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. Now, the government has relaxed foreign direct investment norms across 15 sectors, including defense, construction, banking, single brand retail, broadcasting and civil aviation. Now, the move comes 2 days after the Bharatiya Janata Party-led National Democratic Alliance lost in the Bihar Assembly elections and a day ahead of the Prime Minister's visit to the United Kingdom. Now, importantly, the government has also raised the threshold limit of approval by the Foreign Investment Promotion Board or FIPB from the earlier 3,000 crore rupees to 5,000 crore rupees. Now, the big question is, will these steps help revive investment and provide the kicker to the economy that we are all looking forward to?
Notice the timing of the announcement. A day after the Bihar election results announced a rout for the NDA alliance. Foreign direct investment in 15 major sectors liberalized, the government pushing ahead with its economic reforms program that can be done through executive order.
Foreign direct investment is an additionality of resource. This additionality of resource is required if the cycle of economic activity has to go on. We still need a very large resource both for infrastructure, for new initiatives like Startup India, Skill India, Make in India. And as I said, foreign investment is certainly an important additionality of resource.
It's a vast gamut of areas in for relaxed FDI norms. Defense, broadcasting, civil aviation, construction, plantation, agriculture and animal husbandry, mining and mineral separation and manufacturing sectors are to be opened up further. FDI norms have also been eased for single brand retail and duty-free shops, cash and carry, wholesale trading and private banks. The e-commerce sector will benefit too. The ceiling on FDI investment through automatic route has also been increased from 3,000 to 5,000 crore rupees. The relaxations, especially those related to retail, came in for strong opposition criticism.
भारतीय जनता पार्टी FDI ला रही है, ये हमको ताज्जुब ज़रूर हो रहा है कि यही भारतीय जनता पार्टी है जिसने कई सेक्टर में विरोध किया था जब वो विपक्ष में थे.
A key government focus area is ease of doing business. For investors' convenience, the Foreign Investment Promotion Board is to compile a book on all FDI related rules and norms. Krishnanand Tripathi's report for Rajya Sabha Television.
To discuss this, I'm joined by DK Joshi, Chief Economist at CRISIL, Saugata Bhattacharya, Chief Economist at Axis Bank, and Satish Khanna, Chairman of pharmaceutical company Fullife Healthcare Private Limited. Gentlemen, thank you very much for joining me. So, it seems to be a dramatic move or a set of dramatic moves. Saugata, let me begin with you. What are you taking away from these set of FDI announcements?
I think it was a very good move. I think this is a planned move as a part of a whole series of reforms that the government seems to be moving ahead with.
Okay. So, it's not in response to a loss of elections at the assembly level?
I mean, these things can't be done at short notice. I mean, due deliberations would have been done with each of the individual ministries, line ministries involved and things. So, this would have been in the anvil for a long time. I think together with this, I mean, you remember, go back to the original problem that seems to be bedeviling corporate India. We talk about highly leveraged companies and so on, but the essential problem that we see in construction, infrastructure and so on has been a significant erosion of equity. Due to whatever, I mean, system risks, other risks, erosion of equity. So, we need equity money right up front, the risk capital that will get projects started. This capital is not that forthcoming in India as of this point in time. So, we need to tap into global capital pools. So, this was a kind of enabling device that will enable access, greater access to some very key stress sectors and sectors that would play a large part in investments going forward.
Right. Okay. DK, what are your takeaways from the government's announcement, which really has come after a while?
Well, I think whatever it is, it definitely looks like government is intent on pursuing reforms, and I think the gradual movement towards greater integration with the rest of the world, I think all those objectives, it's moving towards those objectives. Yeah, it came in suddenly, but I think it's a welcome move, and government is also trying to put all the FDI regulations in one place. I think that's going to make it easier. So my sense is that one, it is going to help India move up the ladder on the ease of doing business. Second, I think in some areas there is a cash shortage, and I think we'll get there's a liquidity issue. So foreign players can participate more in those segments. And then finally, I think it will also bring in more technology and innovation over a medium term period. So I think overall it's a step in the right direction.
Do you place this move in the context of the kind of FDI we've been seeing and the overall investment horizon today? So, for instance, FDI for this period, that's Jan to June 2015, is up 30%, and presumably it's going to be better this year than surely last year. But how would you place it in the context of overall investments that have been happening? I'm talking mostly of the private sector.
Well, I think as far as the private investment climate is concerned, that's very weak right now. And I think the foreign investment is not a large part of the Indian overall investment basket. It's always been incremental addition to overall investment. So I think from an overall lift in capital cycle in India, I think it's very critical that the private corporate sector starts getting into the game. Right now, I think the driver of overall investment to some extent is government, where they're trying to push sectors like roads, etc. And I think the private sector is keen in only few segments. I think maybe in the power sector they are somewhat keen on transmission segment. And then I think the private sector is also keen on investing in the automobile and also in the pharma segments. But the large areas where I think which is infrastructure, which is steel, cement, I think all these segments, I think there is no appetite for private corporate sector to invest going ahead. So I think in this environment, I think we'll get some lift to the foreign investment over the next couple of years. This cannot be a driver of overall investment in India, because foreign investment doesn't have that critical a role in India.
Talked about pharma, and that's a good point to bring Satish Khanna in. So tell us, how do you see investments coming into this sector, and what's the gap? I mean, what do you really see is the area where more investments could come in? What nature of investments could we see, which could be facilitated by a good FDI policy?
Well, if you see the pharma sector in the last, starting the big one with Ranbaxy, where Daiichi Sankyo invested, if we see a lot of deals have happened, they're pretty large ones. And most of the money had come not to the companies, have gone to the promoters. So it is more encashment of equity rather than money coming for the growth.
Sure.
Whether we take it Hospira, whether we take it recently, Mylan has done a series of acquisitions, and it's encashment. I think unlike where the money comes in construction to participate, or construct or other infrastructure where a lot of funds are required to participate in the growth, and the direct FDI is actually intended for that, whereas in pharma it's encashment. But there is a place even in pharma where the money can come in for growth and the job creation. Today if we see FDI permits pharma automatic route if it is a green site, not in the brown site. The brown site goes to FIPB, and FIPB then takes view. The green site investments by FDI haven't happened in the last 5 years. Very negligible. The need is there, but hasn't happened. The brown site, the bigger one, all the deals have happened are the bigger companies. The smaller companies haven't happened. The need is how smaller companies can take the equity capital and grow and create jobs and create the growth cycle in the pharma space. And there, because they are already existing, they are in the brown category, so they have to go through FIPB.
Right. So you're saying,
I think there they have to do that up to maybe $5 million, $10 million investments. It's an automatic route, even if it is brown.
Okay.
Right now that's not so, and FIPB now is efficient, but if we see historically, it used to go very slow. So if they deregulate the brown site pharma companies up to certain cap.
Okay, DK, you said that FDI can play only a limited role because of the sheer size of the investment need in a country like India. But what are the areas that FDI can play a quicker strategic or a kick-off role? For example, we had the example of pharmaceuticals just now, where we said that, okay, if we were to allow more greenfield and surely more brownfield, that would have a multiplier effect of sorts. Any areas that you see fitting into this space?
Well, I think one area where FDI can play a very important role, and I do see an appetite or the availability of funds, is infrastructure. But for that, I think we have to set the domestic house in order. We need to have the PPP framework right, because most of the funds that have money, or sovereign wealth funds, or aging countries, I think they are looking for steady returns. Nobody is chasing alpha there. So I think in that sense, I think there is a lot of money waiting to come in, provided the business climate improves. I mean, I think that, so you need, apart from just these regulations, you also need steps to ease the efficiency of goods market, labor market, etc. I think then I think you will have a virtuous cycle kicking in. Right now, I think in this, unless I think those are taken care of, my sense is that you'll only get incremental capital in one sector or the other. I mean, not across the board. And I think the other area is where I think government is not opening up is the multi-brand retail. I mean, that is where you have more benefits, I think, than the single brand, etc. I think that is that should also be gradually, I think government should move towards that. I think these two areas I see as potential if I think we do the enabling changes in the domestic market as well.
On that, I mean, as someone who is in the manufacturing space, if you were to look ahead, what are some of the other things that you would want to go along with these kind of announcements?
Well, I fully agree with DK that the enabling atmosphere is very, very critical. If we see in a macro picture, today we know Indian economy is closer to $2 trillion and it's growing, and it has to grow multifold from here on. But the kind of infrastructure, the kind of regulations we have on the labor side, the kind of infrastructure which will really be required to operate the country at 5 trillion economy doesn't exist. Soft side as well as a hard infrastructure. Soft side is the enablers of the law and the legislative, and the hard is what we miss in our physical infrastructure. So if these two have to be created, the soft, the government has to take care, but the hard infrastructure will require a lot of funds, and if that is not in place, then FDI, as today Mr. Kant was saying of DIPP, that we expect $100 billion FDI coming in. Today we are at 30. So if, and he says that we can have $100 billion coming every year thereafter, which is possible, and we need it for a $2 trillion economy to grow multifold. That figure is not that large, but then enabling environment or the infrastructure should also be. This is very critical.
Right. Okay. Saugata, last word. What's the way forward? Having done something which is significant, how do we build on this?
Well, as everybody, all my fellow panelists have mentioned, I think the internal set of say for instance, real estate, take that specific example. A housing regulator, say for instance, will bring that requisite confidence in, that will enable foreign investors to come in with a significant amount of capital that is really thoroughly required for real estate. Infrastructure, I mean, remember that we talk about infrastructure, but there are all these projects which are now nearing completion, which will have revenue visibility coming in near order. So, I mean, it is these, the private equity, hedge funds, other types of equity investors who come in once revenue visibility is achieved in the project, when the project construction risk comes down significantly, and banks thereby enable banks to hand over those projects so that their balance sheets get opened up for investing in new projects. So that's one. So their infrastructure regulators for various sectors, I mean, with a composite view on mining, other segments, will play an essential role in bringing in confidence into those segments.
Right. So that's a good point. So I think we've run out of time and we need to close. So apart from creating an enabling environment, drilling down on some of these areas a little more, like pharmaceuticals, we also need to create more sharper regulatory structures in order to give investors comfort. We've run out of time. Thank you so much. We need to go in for a break, but coming up on the other side, we look at the stock markets and how they've ended the year. Stay with us. Welcome back to Policy Watch. The stock markets have had a weak Samvat 2071, the Hindu calendar from Diwali to Diwali. The Bombay Stock Exchange Sensex lost 4% in this period. Now, the Sensex started the year at 26,787, hit a record high of 30,274, but ended below 26,000. The Nifty, which hit a record high of 9,119, ended the year at 7,783. Now, the question is, what lies ahead in Samvat 2072, and what are the markets looking out for in terms of global and local macro cues, particularly on the policy front?
The special Muhurat trading on Deepavali reflected some enthusiasm as both key indices BSE Sensex and Nifty closed 0.5% above the previous day's close, at least a good beginning to Vikram Samvat 2072. But it's been a poor 2071, with the BSE bucking the strong positive trend of 3 past Samvats this year. The BSE recorded a 4.3% decline and the Nifty was down 2.7% during this period. The Sensex's 4% loss was the biggest in the last 4 years. It was also the third worst return given by the Sensex in a decade. The rupee also depreciated 8% against major currencies in Samvat 2071.
To discuss this, I am joined by Ajay Bagga, Chairman at OPC Asset Solutions, and Dipan Mehta, member at the Bombay Stock Exchange and the National Stock Exchange. Well, gentlemen, thank you very much for joining us. Ajay, let me begin with you. Before we come to 2072 and what lies ahead, how was 2071, particularly given the fact that the Sensex has lost 4% and seemed to be a disappointing year overall?
Yeah, see, it started off well. So from Diwali till March, we really made a new high
And you
for
hit
the
a high,
market.
yeah.
And then last 7 months has been a washout. So started well, but belied expectations, belied on the ground realities, and valuations probably ran ahead of themselves. So we saw a sell-off and a stock taking happening really in our markets. So had a pretty poor run overall. And been a disappointment, but given where the valuations were, I think it was bound to happen. Fundamentals always catch up. Short-term market might be sentiment driven, it is a voting machine. Long-term, as Benjamin Graham said, it becomes a weighing machine.
Okay.
So fundamentals always win.
Right. So Dipan, before I come to your outlook, quick sense of what are the highlights from your perspective in the year that went by?
Well, I think optically the Sensex and the Nifty have been flat or slightly declined by 5-6% or thereabout. But investor portfolios are done exceedingly well in the range of say 20 to 30%. But not only with the portfolios managed by us, but by other brokers and fund managers as well. And the reason for that is that a lot of quality mid caps did exceedingly well in the last Samvat year, and they were in the private sector banks and pharmaceuticals, Indian FMCG companies, select exporters, ceramic manufacturers. So there were many bright spots in the entire year, which are not part of the Sensex and the Nifty, but which did exceedingly well, gave returns anywhere from 30% to 200% or thereabout. And a lot of investors were focused and invested in those counters. They were all the popular ones, the quality ones, which have been delivering performance for the past 2-3 years. And the bull run in that quality segment of the stock market was in full flow in the last Samvat year. So although we had a few laggards in the Sensex and Nifty bringing them down, the large cap IT stocks, the commodity companies, telecom companies, some of the MNC, FMCG companies, the likes of ITC, HUL. So these sort of companies did not give any returns, which is why the Sensex Nifty remained flat to slightly declining. But there were many counters, many industries which did exceedingly well. So by and large, I don't think we or many investors have anything to complain about the year which went by.
Ajay, let me come to you. I was looking at a list of stocks that did well on the Nifty last year. So there's Maruti, IndusInd Bank, Lupin, Bharat Petroleum, Bosch. Now, the point being that these belong to disparate industries.
Yes.
Right. So what's the lesson from this that we can take forward in some way to the coming year?
Yeah, it came back to management. It came back to good operating cash flows, a good business model. And if the environment was conducive, it took off. Especially look at oil marketing companies. The diesel subsidy virtually went away, and a lot of working capital got freed. Their interest costs have gone down while maintaining minimal marketing margins. So their subsidy burden reduced considerably. So there were good tailwinds like that. There were good performances like auto ancillary, but it was also subdued for the players which got highly leveraged. So we had, say, an Amtech Auto not doing that well because of the leverage that they had. Again, I'm not saying buy or sell, just giving an analysis on those. But clearly it came back to low leverage, high degree of management performance and good cash flow, good operating business models.
Right.
I think those basics came back.
Those basics came back. Great. So if we were to now look ahead, and what we're trying to understand is what are the triggers, right? Both the macro triggers as well as in some ways the micro triggers, global and local. So Dipan, let me begin with you. What's going to weigh on the markets in the coming Samvat?
I think it's a long year. What we can just focus on is the events which will take place over the next 2-3 months or so. And two events I think will play an important role now that the earnings season is over and done with. And that has been a bit of a disappointment. The market attention will shift to the winter session of the parliament and whether GST will get passed in the Rajya Sabha or not. And the second is the US interest rate increase in their December US Fed meeting. and if the interest rates actually go up over there, and the next question will be what is the kind of program or roadmap for further interest rates. So that's the two, I think, important developments which market will start looking at. And then there of course are the RBI policies, and there's always the hope that some interest rate cut may come through.
Ajay, what are your key the factors or the metrics that you're looking out for?
Biggest wish list would be that if politics can leave business alone and you do the minimal program, at least what takes care of the country's development, don't hold that hostage to political one-upmanship. I think that's the biggest wish list from a marketman, from the Indian corporate and the common citizen. I think that's the biggest. But looking ahead, I think what will be the key drivers? Earnings growth, how soon does it come back? It's not looking like, and the big change, Govind, over the year is beginning of the year, all sell side guys were talking about 18% to 20% earnings growth. That has got tempered down to about 8% now for this year. And they are also tempering next year growth down, given the track record. I think that there we are getting very extremely bearish. I think we will be surprised on the upside, given the kind of interest rate cuts that have flown through and the executive action that's taking. On Monday, I was at Piyush Goyal's press conference, extremely impressive. 3.5 hours he held court, and the amount of work they are doing, I think they've done a very shoddy PR job, they've done a very shoddy communication job, but the amount of work that's going on, if we can implement more of that, it's a huge game changer. Same thing in railways, same thing in roads. Defense will take time, but it is coming through. These 4 or 5 sectors start firing, it can take the economy much higher. But otherwise, we are a very fabulous developed economy in the sense that 70% of GDP is domestic consumption and private consumption. If you see the GDP, it is 20, 40, 40. So clearly government 20% is doing well. 40% of private capex will not happen. I think even next 2 years, you are being very optimistic for it to come by. 40% of private consumption can really take off if you do some of the levers, like you give some tax breaks, you give in some allowances to the consumers, and you do some welfare spending.
Right. Okay. So it's interesting that you do talk about welfare spending. Okay, Dipan, let me come back to you. So one of the factors that was in some ways a surprise in the last Samvat was the revival in the primary markets. Right. You've seen about 17 new IPOs, including Indigo, which came in last, and that seems to have stirred the market a little bit. What's your sense? Is it a good market for fresh supply? Are you anticipating or expecting more supply in the coming Samvat?
See, I think the highlight of the primary market is that broadly we had good quality paper coming on the street, and it may have been slightly overpriced in a few instances, but we had good businesses which otherwise were not listed, or those segments are not listed, they got listed, and that was a very important aspect because it offers even more choice to investors. And there were no large mega issues. Even the public sector disinvestment program was on a low key. So these are the highlights of the primary market, and I think that this trend should continue going forward. If you look at the list of new aspirants trying to get their stock listed on the exchanges, and I think this is exciting time for investors in the primary market as well as the secondary market. As I said, you have more choice, new industries, new investment themes to bank on. So I think it's very positive, and by and large, if the issue is good, it will get very good investor support and subscription, as we have seen in the case of Indigo.
So Ajay, if you were to start now looking at sectors which could potentially need more policy support in the coming year, what would they be?
I think we've got the hand of God.
In terms of potential in the markets,
yeah. Definitely the country got the hand of God in terms of the commodity price destruction. And thankfully, we are a commodity consumer. So now we need the hand of man, quite clearly. And we're all I think the reforms will be executive driven rather than the legislative driven, given the nature of the upper house right now. So what can you do? Like FDI, all these 15 sectors which were liberalized, this could have been done 1 year back. So please go back and examine what all can be done. I think the Prime Minister made a good statement today that no retrospective taxes. Go and enshrine that in the tax code, that we will not reopen after 5 years, 10 years, that kind. basic tax reforms are needed. On the ground, Govind, still there is a lot of harassment both in direct taxes and indirect taxes, because that's been the nature of the bureaucracy for the last 60 years. You can't change it overnight. Third is just liberalize the entire Inspector Raj, which has done a creep again. I think if these few minimal executive changes can be done, that itself, given the enterprise of India, will really lead to a boom.
Okay, Dipan, last word. What's your sort of policy wish list for the coming Samvat?
See, I think that the big wish list, of course, is that the GST and the land acquisition bill, the bankruptcy code, some of the other legislation do get passed, because that's the big ticket reforms. These are reforms which can act as game changers. Apart from that, I think, as we saw in the case of the power industry and the kind of programs which were there for the power distribution companies, the Uday program, I think that was very positive. We would like to see effective implementation of that program, and something more than something dramatic, or I would say something which is effective to handle the NPAs in the banking sector. If something could be worked out on that in conjunction with the RBI and the industry and the government, I think a lot of the issues with the credit growth could get resolved, and you would have smoother credit going to the industry, and that could act as a trigger for improving the economic growth. Apart from that, I think small measures are being taken to improve the business climate, to improve the ease of doing business in India. I hear that even the Companies Act, new one, 6 committees have been set up to see if it can be simplified and some of the bottlenecks can be resolved. So I think at a micro level, the government is undertaking several steps to see how the life can be made easier for the businessman or the industrialist, and that I think is very positive. As I said, big ticket will depend upon the parliament, but I think small changes here and there is a continuous process, and we have seen that ministers are now actually getting a grip on the ministries and making changes which will make a difference in the long run.
Thank you so much for that, and thank you Ajay for putting together a nice policy wish list for Samvat 2072. Hopefully it will be better than the last one. That's all we have time for on Policy Watch this week. Thanks for watching.